We've been receiving that weekly pullback, and the market slid yet again today due to the concerns with the AI trade war, as well as the job numbers that came in from October. What's going on, everybody? My name is Dr. B. Welcome to the channel. If you're new here, if you're a returning listener, I appreciate the support. Y'all are doing absolutely amazing hitting that subscribe button. But there's some of you that still watch the new videos that may trickle into some of these midweek updates that are still not yet subscribed. I'd love to earn your subscription. We're almost to those 2,000. So make sure that you hit that subscribe button, as well as that notification bell to know when I have a new video coming out. All right. So today we're going to talk about why the market slid today, what you should expect next for the remainder of the week, and maybe have a little bit of optimism going into the remainder of November, which is typically more bullish in nature. All right. So without further ado, thank y'all so much. Let's jump into it. We've got the U.S. employers announced 153,000 job cuts in October, marking a 175% surge and the highest from any October since 2003. We know that was following the dot-com bubble, as well as going into the housing market crash at the end of 2007, going into 2008. So it's an ironic time that we're starting to see what's actually underneath the covers from the overall economy as asset prices have been surging, right? So if you bought the dip in 2020, in 2022 bear market for any stocks or homes, you're doing fine, right? You're doing great. But trying to get those off your hands, you're like, do I keep holding? Do I take profits? Do I sell? Like, there's no buyers out in the market for my house at these prices, right? I have a great interest rate. So it's kind of in this middle period where some people that own are feeling stuck, or they don't want to leave their jobs, or companies are not hiring as much, or they're also firing as well. So it's this weird mood point. And most people are asking for rate cuts, but as you can see here, and I don't agree with too many comments on Twitter, but in this case, rate cuts won't stop what's happening. I kind of agree with that. So people are praying for more rate cuts and rate cuts and rate cuts, when really we need to see how we can solve this debt problem in the United States, producing more jobs, getting more, in the household for families, getting more cash flow so they can buy the assets and actually live a normal life above and beyond their expectations. And it's just not happening in the American household right now. So this is all starting to uncover the thing that most people are experiencing and that they know, but it's kind of this, I don't want to talk about it. Everything's fine. We'll just figure it out. But right? So gas prices, grocery prices, asset prices, home prices, rent prices, everything, car prices, it doesn't matter what it is. You have that underlying feeling that this feels heavy, right? So that is what the market is feeling right now, as the stock market has been at all-time highs, when the American household has been feeling a little bit heavy on their heart and their finances. All right. So that is the mood point there. We also have news from Jensen, NVIDIA, AI, China. Okay, that should pull up. Let's see what he said. Warrants of China's AI edge quickly clarifies that U.S. lead. All right, so on yesterday, the 5th of November, 2025, Jensen Huang, the CEO of NVIDIA, notated that, hey, we think China might be leading this AI race and we're a little bit behind. And he quickly kind of shifted that and said, hey, we're doing fine. So that kind of spurred the market a little bit lower, as the top company market valuation wise in the world, NVIDIA, started taking some profits and quote unquote pulling back / for some people plunging. Okay. So I want to jump on the charts here, and I'm going to show you exactly what levels to look for the remainder of the week. And for those of you that are like, I needed to stay out of the market this week, I don't want to look at my portfolio, it's pulling back. The Palantirs, everyone had good earnings, but why are they pulling back? So I want to give you some levels on the downside to look for, because when these pullbacks happen, I'm guilty of it as well. You're like, when is the bleeding going to stop? Is it going to continue like April? Do we have another week of this? Like, I thought November was supposed to be bullish, right? So I'm going to go on to the SPY chart and the QQQ chart and show you some make or break levels. Okay. So what you want to see for the weekly chart here, let me make sure that all this is cleared. Moved over. All right. What we want to make sure on the weekly chart is that we hold this high volume node roughly at around 667 to 670. Okay. And the reason being, if you can see these moving averages here, I don't use too much of the 9 EMA necessarily on a weekly, but you can see that when we got back above the 9 EMA here, we just ride all the way up on a weekly chart. And in every time we approach that 9 EMA pullback, we held it and rose higher, held it and rose higher. So this helps you a little bit on your concerns for the week about, man, where is this? The charts tell us the story, and the charts are where we make the money. So this is kind of that make or break point, because you can see when we get below this 9 EMA and we close the candles below it on a weekly chart, you can see what starts to happen. And we are nowhere near any 20-day moving average / 9 EMA cross, anywhere near it, as you can see back here in 2024 leading into that tariff news. So what this would have to look like is we would have to have a candle that starts to get underneath, right? Really 665, okay? 665, we still have some support down here at 663, all right? So it can dip slightly underneath it, but if we have a solid candle that closes like that, okay, that's where it gets a little bit more concerning, because then it starts to look something like this, all right? Something like this, where it can flush a little bit lower down into this 20-day moving average, which would probably meet us somewhere around this 650 level, 652 level, which would be an equal low, okay? See that equal low from that tariff news that we had back in the second week of October, right? So this is that weekly pullback. Here's a weekly pullback as well. And then what happened after we had that type of weekly pullback candle? What happened the next 2 weeks? Green, green, green for the remainder of October. What is this? Can we have a hold? Green. Back to highs, green. And then making a new high headed towards that 700 number for November and into December. Okay. So that's what we would like to see. And we can see a little bit of profit taking / I wouldn't even consider those buyers necessarily, but a little bit of profit taking down into these support levels of that 670. And you can see after hours, we're slightly up in after hours. So this is normal to have a weekly pullback. And I tell my community and tell anyone on here on the YouTube streets that after you've had 2 to 3 continuous, it doesn't have to be exactly. Some people might use it as a 3-bar pullback or a 3-bar play, whatever you want to call it. But 1, 2, 3, pullback, and then 1, 2, 3, and then pullback, if you want to consider it that way. But I always like to say you want to see a weekly or a monthly pullback being red, and that is your entry point for those buys that you've been waiting for shares, or those swing trades or those bigger option calls that you want to carry further out. You do not want to chase these moves up into new highs if the dip's already been bought down here, okay? So I like this hold here of 670. It's also at a high volume weekly node. If you can see right there with the volume profile right in this zone, if I move this volume profile up to here and kind of get this little buyer zone here, right in there, okay? So those are all technically buyers sitting all in this zone. We need to see what the reaction is out of this zone, ideally probably into next week, because the time that's recording is Thursday. So this week is pretty much finished, and we'll probably get a little bit of, anyone covering their puts or on the short side, going ahead and covering and getting up out. And we might see a little bit of a short squeeze if this area holds true. Okay. So what I'll be doing tomorrow, I'll be releasing a price action video to show you how the candles are reacting in this area. But we want to see how we react in this zone to make sure that we don't have another situation like that and we just flush into equal lows. All right. Let me give you another analysis of what this looks like, and then we'll wrap it up. I'll show NVIDIA and a couple other stocks on watch. All right. This is kind of a look that could happen. All right. We have somewhat of a head and shoulders potentially forming here. And I'm not saying, it will happen or it may happen, but we have somewhat of that situation kind of potentially coming in, right? So it's not true just yet, but this head is starting to break back below this left shoulder area here, which would flush us down into these equal lows. We find buyers, run us back up to the highs, and then we get some type of situation where we can't get all the way back up, flush new lows, and then we run back to the highs like that. right? Just a little scenario. I'm not really eyeing that just yet, unless we have some type of drastic news or this government shutdown lasts longer or Trump comes in and says something erratic. Who knows, right? But right now, we're still holding these higher lows to go higher, and we're sitting above this daily 50. Ideally, you can see right there that daily 20 has closed below on the SPY. We got to reclaim back above this 673. We got to get back above that daily 20, which is that moving average as you see in the light blue. Okay. Let's jump into the Qs. We close below the daily 20 moving average here. We got to reclaim that. Okay. So anyone that wants to, get into these call options and whatnot, please be careful, because some people were getting in right here thinking, oh man, we're going to fill the gap right there. No, that top wick showed us that we still have selling pressure, and we could have continuation underneath 615. If we can't reclaim 615, that turns into rejection. We start falling down into the low 600s with another flush for that weekly continuation. All right. So let me go into a weekly candle here on Qs. As you can see, right at that 9 EMA is sitting right at that level. So if we have a flush tomorrow and we just come down into those low 600s, that will complete the weekly pullback and we can recoup for next week. All right. There's Qs. So look for those levels at the bottom there. Low end of the level would be right here at 605, roughly 605 to 610. Okay. 605. I know that's a big range, but 605 is right here at that level. Okay. 605. You can see buyer stepped in there. 605, 605. And right there's the daily 20. So I'm going to go ahead and mark that there, which is sitting right at 614.56. So really 615. Got to get back above 615 and start seeing buyers reclaim some of these levels. Okay. Right now, this is my caution zone right there. Excuse me. IWM. All right. IWM is typically a signal for risk on environments. So if the small cap companies are seeing positive momentum, that is typically a good thing for the rest of the market. If you start seeing IWM failing like this underneath its daily 20, underneath its daily 50, right? And we start seeing IWM because those rate cuts are not promised for December, right? Small cap companies would like rate cuts. They need lower rates to have more profitability to run their company because they don't have much free cash flow. They're growing. So if you see IWM rolling over like this, that's not necessarily the greatest thing. So we've got to see IWM start reclaiming or coming down to these equal lows right there, 238, and hold. If we don't see that hold, IWM small caps are going to start flushing down into these lower end of the ranges down to the 230. All right. So we want to watch the IWM small caps to make sure that they hold and start pushing back to the upside. All right. SMH, this is the semiconductor sector. So for anyone concerned about their semis, their chips, the AMDs, the NVIDIAs, check out the SMH. All right. This will show you that the SMH might have lower. So that means your NVIDIAs might have lower. That means that AMD, all your chip stocks that have been running all year, right? You see them starting to fade. The SMH is holding the daily 20. Okay. So if you haven't known by now, I'm big on these higher moving averages to hold to maintain strength. They start failing underneath, right? Look where the next moving average is, down into 330. That's another a $20 drop on the SMH, which would take probably NVIDIA down into my bigger zone that I'll show you in just a second. All right. So let's jump into NVIDIA here. NVIDIA's got a last line of defense really at this 185 level. All right. 185 or reclaiming back above 191. Okay. 191 will give a little bit more comfortability because I saw some price action today towards the end of the day that did not show strength back above this 191. All right. So you want to see it back above 191 ideally, or you're going to have another bear flag consolidation. Look right there. You see that? Drop, bear flag, lower, bear flag, lower. And do we hold this and get back above that 191? If so, then we can head to 195 and back to 200 and then ultimately to fill this gap. All right. I think personally it will find a bottom this week at some point, And then its earnings is on the 19th of November. So running up into its earnings, I believe buyers will step in to run NVIDIA back up into its earnings, which will be into next week. Okay. So there's your NVIDIA. Watch out for this 185 level, 185, 186 to hold right there. Okay. We've already broken below that 195, which people were really looking for that to hold, flush through 190, and now it's at 185. And let's see if it can start rotating back to the upside. All right. Final thing here, Tesla, they approved this $1 trillion pay package. So Tesla, my Tesla bulls, still be careful in the zone. It's kind of messy up here, in my opinion, but Tesla's still technically holding strong. It's got heavy resistance at 470. It's kind of a little head and shoulders situation here. If it starts breaking, this channel, as you can see, Tesla's got nothing but downside there like that. All right. Tesla is very irrational. It moves, not with the market, but the key level to watch on Tesla is going to be this 419 level. Okay. Why is that 419 important? Because that is the previous 2021, 2021 all-time highs. So as long as it's above this 415, 416, right, you are still bullish. That is above those highs. So it's right there at that bottom of the range. So watch that in this consolidation, what Tesla does, right? You've either made money or lost a bunch of money in here because Tesla's not really doing much. I personally like it pulling back, but it's getting heavy. All right. So hopefully that helped you out, give you a weekly synopsis to finish out this week. If you had any concerns of what's actually going on, let me know down below what you think about the economy. Or is AI going to be taking over? What's going on with the AI stocks? There's many of them that are making money, but there's a lot of them that people have poured money into that are not profitable. They're not generating revenue. Be careful with that. Learn how to look at the financials. If you need help, join Leverage University. We'd love to help you out there. And make sure to hit that notification bell. I'll see you all in the next video. Peace.